Welcome friends. Today we will discuss about IPO. Step by step how a company goes to IPO. What are the processes involved? We will discuss in detail. Before discussing that, let us see what we have discussed in last video. In last video we have discussed about this business, how it evolves, how different stages, different funding received like angel fund. Then we discussed this VC or venture capitalist funding, then private equity or PE funding. Then company goes to IPO. So all this process we have understand in last video. Then again in one other video, some of the jargons like merchant banker, DHRP, and other things, important things we have understand. In this video, we will see where we have left in last video. Why company goes to IPO? What are the reasons behind that? So main reason in my view, or you can see in majority of companies, is capex requirement to fulfill capex requirement. As the company growing, they need money for expansion, and they have already diluted shares and got different stages of funding. Now company wants to go public and from public get money because now requirement of fund is more. One thing. Second thing, company do not want to take loan now because this is increases liability and dents profit. Third thing happens to get both, like if a company needs 200 crore, maybe 150 or 175 crore needed for capex requirement, some amount to repay loan that may happen. Some company also requires some operational money, but those companies are very few. Another requirement is risk distribution. As the shares distributed among large group of people, there will be risk distribution among all stakeholders or holder of the shares. Another thing is to reward employee. As ESOP is provided during the initial stages, now it is time to reward employee. How they can reward? Once company goes public, employee can offload or sell share in open market and get best price. One of the reason also is some of the investors now want to exit, like maybe this angel investor or venture capitalist or the private equity players. So to give exit route to those investors, company bring IPO. And during this IPO, those stakes were allotted or sold to public. Another one reason is to improve visibility. Once company goes public, its visibility expands like anything and credibility increases. And company capitalize on this increase of visibility, credibility. They get better business chances and they can also get better interest rate. They can have more bargaining power now because Banks also thinks once company goes public, they declare everything and it has been scrutinized by SEBI and company will have to give declaration and this cash flow, balance sheet, profit and loss, all financial statement in public discourse and there will be a scrutiny of things. So there will be more transparency. Of course, that is giving company more impetus to grow and expand. First thing, what happens to go company IPO? Company appoints a merchant banker, and merchant banker do everything end to end till listing. Whatever required, they do everything. Like in last video, we have discussed merchant banker. Once this merchant banker appointed, they do all due diligence, whatever legal compliance required. They prepare all documentation is done. They also do this DRHP or another thing this. They underwrite shares. They arrive at a price band. All this function of a merchant banker. This all marketing advertisement is done by merchant banker. Merchant banker also appoint other intermediaries for this IPO process like advertising agency or bank or whatever required. So these are the duty of a merchant banker. Once merchant banker is appointed, after doing all due diligence, legal compliances, DRHP, they apply to SEBI with registration statement and get approved from SEBI. If some suggestion is provided or something change is required, they do everything in line with SEBI requirement. And ultimately they get a approval from SEBI. Once they got approval from SEBI, then they will go for marketing the IPO. And for this marketing, whatever required, they will do. They will engage more and more banks. They will engage advertising agency and they can go on road, digital media, print media, wherever they fit good. They will do all due diligence or everything for marketing of an IPO. After marketing, this they will fix the price band and this subscription date is fixed and announced in advance. And during those days, 3, 4 days, whatever date is fixed, anyone can subscribe for that very IPO. And then this book building process happened. And ultimately, IPO is closed and shares were allotted as per application receipt and in line with company with the SEBI directives and on listing date, share were listed there. So these are the process which is followed to go IPO by any company. Now I think you would have got complete understanding how company evolves and how company goes to IPO. Now you may be wondering what are DRHP? We have already given all details regarding DRHP and RHP in last video. You can see there. I will give description of that or link of that video in description box. If you find value, please do subscribe and provide your valuable comments. Please, please do share with your friends and colleagues so that they can also get benefit out of this series. Thank you. Bye bye.